Hello trader, welcome back to another week start analysis on gold. After past weeks quite a few false breakdown, gold started to move again in the major direction of the trend as NFP starting coming this week later after the previous week's shutdown. We could see that impact also coming on gold as gold already have taken quite a few times liquidity from this key level. Now, as we are looking to see a new daily and weekly open, before we look at the lower time frame to see potential trading opportunities in this new daily open, first let's look at the bigger picture to see the overall direction in this market. Now, looking at monthly, this is the historical market structure where you can see that gold is in a long-term bull market. Now, previous weekly, monthly candlestick pattern, if we look at, we can see that it's a full body green candle close with a very smaller wick at the top, sitting on top of this monthly resistance, which is turning support here for the long-term market structure directional bias here. And this monthly candle, we can see the current monthly price action is here where the price has just tested that monthly support multiple times and started to bounce off this level. Now, as this market from the monthly perspective is bull, we can see that it's potentially continue to rise back to the upside here where you can see that monthly also open and close, which is a very important key monthly support. And if we look at also the overall the direction of the trend, we can see that this is potentially starting up a new impulse on the monthly. As if we look at this trending market structure, we can see that there was an correction impulse correction. Now it is in another impulsive phase that could lead that XAUUSD potentially continue to trend here. Now, looking at the weekly chart that you can see on gold, from the weekly perspective, we can see that it's a bull market as well. We can see quite a few weeks back to back maintain that series of higher high and higher low, which is in a long term bull market structure. Now, last week that we can see the candle closed open with a gap and closed with a full body green candle again, showing that this market may potentially remain bullish. Now, if we look at those candlestick pattern, we see that the lower shadow of this weekly candle has a very smaller wick, which is in fact showing that very smaller effort from the seller. Instead, the buyers are stronger in this market. Now, looking at daily to see that as the market from the monthly and weekly showing bullish, we can see that from the daily perspective, a little more clearer picture, which also showing that the market is remaining bullish with a in detail picture that we can see how the market is showing that and over time it's evolving to be more bullish. Now, if we look at the trend that we can see from the daily, what we can see a very important information that we can look at here, that this is the FOMC move that you can see from here. The market dropped to that daily support level where this is an important support. From here the market has made its move back to the upside, and what we can see from here, there is another pullback, and you can see the market has made another move back to the upside again with another pullback. Now, there is a very important correlation that you can see here. This pullback with the FOMC, we saw that back to back two daily red candle followed by one thicker daily red candle followed by one narrower red candle, which showing that the more the trend is progressing to the upside, the higher the momentum as the buyers becoming stronger and stronger. That means we can expect now a potential breakout potentially to create a new all-time high to the upside on gold. So monthly, weekly and daily showing that gold may potentially continue to rise back to the upside. Now, for our entry from the intraday perspective, to see that where we can find an entry opportunity here. Now, here we can see also there was a breakout structure. This is the red candle, that one single session that we have seen completely broken below in this market. And after this breakdown, we have seen there was an overextension to the upside here. So this is an overextension where from this same level the market has overextended back to the upside to almost nearly to 100 and 250 pip overextension. And later from the same level we saw that there was another breakdown here, with also maintaining that series of higher low. That means as the market, whenever it is having a breakdown, there is an overextension. What we can expect here now from the same level to have potentially another extension to the upside, which could even lead to the bigger gap here, which we might see the market even to cross 300 pip extension from this key resistance line to the upside here in this market. That being said, if we look at the 1 hour chart from the lower time frame, we can see the market is maintaining this uptrending market structure where we are waiting for a potential breakup structure, giving a very high probability setup on gold that as soon as we see the market has dropped back below to this key level, and that means on the lower time frame we'll be waiting for a breakup structure as this market is maintaining this uptrending market structure for this early next week. That means with the new weekly and daily open, expecting to go long on gold with a high probability trade setup. Traders, if you enjoyed this education and analysis, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. Thank you, and I'll see you soon in my next analysis.